$89 billion market cap move. So that's something.
Good evening, everyone. Sorry, I was setting up to start. How is everyone? How is Mwendo? How is Ken and Bridget?
We're fine, Gigi. How are you doing?
Okay, thank you. Rachel hasn't joined yet. We shall continue. Okay, let me share PowerPoint. So today we are reviewing the candlestick patterns on the exchange, isn't it?
Yes.
Yes.
Okay. Tomorrow we are going to start. Technical indicators. So prepare for technical indicators. If there are any notes you haven't written on these candlesticks, just note them down. But I know Rachel is going to share this on the app. I don't know whether it is there. I will confirm after today night. Tomorrow you must have all these for candlestick patterns. So we talk about the pin bars. You remember the pin bars? I would wish that just to rush through and then I go to the exchange, isn't it?
Yes.
So pin bars, remember we have bullish and bearish. So bearish pin bar indicates it has a negative sentiments to the price. So if you see a bearish pin bar of this nature, and it is seated on a resistance area where we have a lot of resistance, and by resistance I mean far away from the moving average if you're in an uptrend. If it is in a downtrend, they will be seated on the 50 moving average or 21 EMA. So the other one is bullish. Bullish, expect to see bullish candlestick on the support. If you see it anywhere else away from the support, don't take it. That could be a false signal. Another place you can get bullish signal on the resistance. That is in a downtrend, you see them far away from the resistance. The resistance are moving averages. So far away from the resistance, down there, below far below the moving averages in a downtrend. In an uptrend, you see them on the moving averages. And by here, I'm talking about the 21 EMA and the 50 moving average. Mainly, the best support is 50 moving average. Then we have the tweezer top and the tweezer bottom. Tweezer top is bearish. When you see it, you should see it in a resistance area, far away from the moving averages in an uptrend, and in a downtrend seated on the moving averages, because it is bearish. And when you see tweezer top, just know the price can revert to the downside. Then if you're looking at tweezer bottom is bullish. You see that on the support in an uptrend. On the support, that is seated on the 50 or on the 21 EMA. That is in an uptrend. In a downtrend, you expect to see that far away from the moving averages. That is down there, where we have some support of some kind, because the moving averages act as resistance. So that is another name for tweezers are two-bar reversal pattern. So if you have tweezer top, you can call it a two-bar bearish reversal pattern, and tweezer bottom, you can call it a two-bar bullish reversal pattern. So we have also bullish engulfing and bearish engulfing. Bullish engulfing, you find it in a downtrend, then all of a sudden at an area of support at the 50 moving average, at the 21 EMA, that is in an uptrend, and then the price will rise. Also, you can get it in a downtrend far away from the moving averages. That is a bullish engulfing. The bearish engulfing, you find it far away from the moving averages. That is on the resistance areas and not on the support. The support in an uptrend are the moving averages. So in an uptrend, bearish engulfing iko huko juu in an uptrend. In a downtrend, you can find bearish engulfing, lakini iwe kwa moving averages in a downtrend, because moving averages act as resistance. So in short, bearish engulfing at a resistance, bullish engulfing on the support. Anytime you get, yes.
Excuse me. So the bearish engulfing is found where the bearish candles are normally anyway.
No.
Below the resistance.
When you talk about bearish engulfing, you expect to find it at the resistance. If it is in a downtrend, resistance are 50 moving average and 21 EMA. The moving averages basically are the resistance in a downtrend. So if you see a bearish engulfing in a downtrend, ensure it is seated on the moving averages. If you see it,
Okay.
in an uptrend, far away from the moving averages, in an uptrend, uko juu, and then moving average is huku chini, that is also a good position. It tells you that the price will revert to the mean. Okay.
So it is found far above the support. I mean, yeah, far above the EMAs.
Correct.
In an uptrend, in a downtrend.
Yes, correct. Then we have morning star and evening star, the same. So morning star is bullish. So morning star, you see it on a support in an uptrend. Evening star, you see it on the resistance in an uptrend. In the down in the downtrend, morning star, you see it way below the moving averages, which is at the area of support. And
the downtrend
star, you get them at the moving averages, which are the area of resistance in a downtrend. One white soldier, the big difference is you find this, the price was going down, all of a sudden that bearish candlestick closes there and the current candlestick opens right above, like sort of it jumps or skips to open at a high. So due to this jump, you get a gap in between where the last closing happened and the current opening. So you see the price again goes up to either close higher than where it opened or within the same range. So basically, one white soldier is bullish, you see it on the support. One black crow is bearish, and it is the opposite. Usually in an uptrend, you see that prices going up, then that candlestick bullish one closes right above there, and then the next one opens, sort of skips and opens below, far below the last closing. So you see that gap, and you know the price goes down, and you know this is one black crow, and one black crow is bearish, and you expect to see that in an area of resistance. Then one white soldier, as I said, occurs in a downtrend when the prices are going down, and then all of a sudden the price peaks. So this could be a short-term reversal towards the mean, and then the price peaks. Then we have three white soldiers, as you can see there. This one, expect to see them on the area of support, and three black crow on the area of resistance. So those are the ones that we covered, and there are so many others out there. The one thing that I told you guys that is quite important is learn to be very patient, very calm. Wait for candlesticks to form. Don't FOMO in. You remember FOMO? Do not FOMO in.
Yeah.
Don't have that fear of missing out. So don't FOMO in. Always ensure you are calm. Wait for a candlestick to completely form. Let it form, and then once the price now starts to form the next candlestick, that's when you join. Don't join when or make a conclusion that this is definitely going to conclude as a one white soldier or as a bullish pin bar. Anything can change in crypto world. Anything can change within a matter of seconds. So be patient. Wait for the candlesticks to completely form. Then the other thing you need to note that candlesticks mean nothing unless they are read together or read in accordance with their positioning, where they are positioned. On the moving averages, in an uptrend, that is support. So at the area of support and at the area of resistance, those are the most critical things to look into when you're looking at candlestick patterns. Any candlestick can appear anywhere. Don't take it serious unless it is well positioned. Then you also need to understand the human behavior or character of emotions that are involved when trading is happening. What causes the formation of those candlesticks? So welcome, Rachel. It took a little bit time to join, but karibu. So I hope I've ended that. We can go to the exchanges now. Let's go to Binance. Was to share my browser. Something happened. Let me share my browser. I think I'll have to get. Finance. Are you guys able to see what I'm sharing?
Nope.
Not yet.
Not yet.
Oh. Nashare mwenyewe. Haya. Now you're good. Now,
It's coming.
okay, great. So let's go to, you can see Bitcoin has made a very good what candlestick. Let me ask Bridget, anyone don't talk, allow Bridget to answer. Bridget, are you there? Bridget, are you there?
I'm here.
Yes, yes. Can you see this candlestick?
Yes, I'm here.
Can you see this candlestick that is forming?
Yes.
What candlestick pattern is this?
I think that is it's a bullish.
So
It is a bottom.
wait fast before, not too fast, wait a minute. I'm trying to put in the moving averages, so I'm going to put in this one. I'm going to increase the boldness. I change the input to 50 so that I make this to be 50 simple moving average with the color blue, and then I change the 21 EMA and I put the input as 21, and style I want to change to make it bolder and change the color to maybe which color? Maybe make it red. Yes, red would work, or any other, but red looks okay. So red is 21 EMA, and then blue is the 50 simple moving average. So Bitcoin yesterday had this candlestick that took us to a high. We have very many of them. There are so many of them. We had these 3 of them, and then at the same time we had another. We had another one here. We had this one also on its own. So you had a bullish candlestick, this one, and you had the morning star. And now I have asked which candlestick is this to Bridget that is forming. It hasn't fully formed, but it is forming. Yes, Bridget.
It is a bottom. It is a bottom.
It is a bottom. Oh my God, I need to repeat this. I need to repeat.
Okay.
Nahitaji ku repeat hii kidogo. Let me just share my screen so that you're able to see what I'm sharing.
Yes.
Okay. So she said to the bottom. And what about now? Can you see what I'm sharing? I want to go
Not yet.
tweezer bottom. Tweezer bottom. This is the tweezer top. This is the tweezer bottom. Now, Bridget tells me what she was seeing on the exchange is tweezer bottom. And I'm not
that one.
I just want Bridget to deal with this. This is tweezer bottom. And the word tweezer, Bridget,
Yes.
comes from two, the word two, or tuba, usually tweezer. Tweezer meaning 2 of them.
Okay.
So tweezer bottom. Why is it bottom? The price was going down. This was a bearish one, and then all of a sudden it has bottomed out. So it's now going to go up. So this is the bottom. Because it was coming down, then it has started going up. So this is the bottom. So it is tweezer bottom.
Bottom.
Tweezer top, the price was going up. As you can see, the price went up, and then now it's coming down. So this is the top. So tweezer top. 2 of them at the top. I hope you don't repeat that mistake maybe again.
Okay.
Okay, now tell me, which candlestick is this? The three of them. And it hasn't fully formed, it is still forming.
The three of them.
Yes, the three of them. What do you call them?
That is it evening? So,
They are always stars.
yeah, evening star. Evening star, yeah.
Yes, yes. That is an evening star. So,
Yeah.
Asante, that is an evening star. Let me take you to the evening star so that you see whether you got it right. So this is the evening star here. A bullish, the price was going up, the bullish candlestick, then all of a sudden an undecided candle, and then,
Yes.
and this candle doesn't have to be the same color as red. It can be red or green. What is important is the color of this one and the color of this one. So when this one is, then this one is bearish, it tells you this is an evening star. Evening ni jioni. Jioni ukiona star ya jioni ujue bei zitaanguka.
Yeah.
Na sokoni ukisikia bei ya jioni, you know what bei ya jioni means? Lucky to be born in Kenya kujua bei ya jioni. Haya. So this is an evening star. Then let me go to Mwendwa. Mwendwa, can you tell me which candlestick is this? I'm going to show you. Tell me which candlestick is this. Can you see that candlestick?
That is a single candlestick you circled.
Yes, that's a single one. That's a single candlestick.
Is it? You know, now with that circle, I can't see properly.
You have already seen it. This candlestick, it is only one candlestick.
It's a bullish candlestick.
Yes, yes, correct. And should you take it or leave it in terms of its position?
You should leave it because it's below the EMAs.
You should
leave it.
You should not buy.
You should not buy, yeah.
That
you should
is
ignore
wrong.
it.
That is wrong. And this is why this is why it is wrong. This candlestick here at this position, this is the 50 moving average, and the 21 EMA is below it. So they are indicating that we are in a downtrend. In a downtrend, these two lines act as support. They act as support, isn't it? Sorry, in a downtrend, they act as resistance. In a downtrend, let me mute out, sorry, don't worry about the person talking. So what I'm trying to say is that in a downtrend, whenever the smaller moving average crosses below the bigger one, so you have the 50 and then you have 21. This is a downtrend. When you have the 21 below there, this is a downtrend. And in a downtrend, moving averages act as resistance. So that bullish pin bar is far away from the resistance. So it is at the support. Iko huku chini. So here we have some level of support. And even if you are to draw some lines, let me draw a horizontal line to indicate support. If I'm to draw some lines here, you would see that is totally seated on the support. Can you see there is a lot of, whenever we broke above that, this was acting as some area of support. There are so many candles that hit this line and went back up. And at this point, this candlestick was basically unable to, the price was basically unable to take to the low. And now it wants to break to the upside. So it is seated on an area of support. And this is the resistance. So this is a bullish pin bar on the support. So should you take it? Should you leave it? Mwendo, unmute.
Sorry, I muted. Yeah, and you muted me. Yeah. So yes, you should take it.
Yes. In a downtrend, and this is what you call counter trending. You buy and then wait for the price to get to the resistance and you sell. You should have exited at this point, because you never know what will happen, and it is called counter trending. Anyway, I'll talk to you about it later, and I'll show you how to exit in a good way. But just know that in a downtrend, you see that you take it, you take some short-term profit up to the area of resistance. These two are resistance. You exit until we break above them. So when we broke above them, and again you saw this. So Mwendwa, again, tell me which candlestick is this?
Gigi, before you answer that question,
correct.
The red there is the red moving average just above that bullish pin bar is what?
That is a 21 EMA. Nafaa nikuulize ni gani? Kwa sababu hapo
I didn't see what it was.
Color?
Oh.
Can you see this color?
Yes, I see it.
And can you read here?
Kadogo lakini it's EMA, it's in EMA 20 EMA 21.
Yes,
yeah.
21 EMA, and then also the blue one. Usually reading a chart is very important. First thing, when somebody opens a chart for you, read this. The first thing to read is Bitcoin against USD on 12-hour time frame, and you can see the 50 simple moving average and 21 exponential moving average. That is what you need to read in a chart before you even start looking at candlesticks. Candlesticks should be the last things.
Absolutely.
So you first look at ni kama mtihani. Mwalimu akichukua mtihani anataka kumark exam, anaangalia huyu ni mwanafunzi yupi huyu. You cannot mark if you don't even know the subject, whether in mathematics or English. So you look. Exactly. So you should look out here. Then
the name is missing.
The question is back to you.
So
Mwendwa,
Gigi, sijamaliza na swali yangu.
Uliza swali.
So you said because the 21 acha nisikose 21 EMA is below the 50 EMA.
Yes.
So that we're in a uptrend.
Whenever you see a smaller EMA being below a bigger one,
yes,
that is a downtrend. Whenever you see a smaller EMA being above a bigger one, we are in an uptrend. Whenever you see a smaller EMA being below a bigger one, we are in a downtrend. So if the bigger one is above, we are in a downtrend. If the smaller one is above, we're in an uptrend. Uptrend when the smaller one is above the bigger one. So uptrend. When it is the opposite, when the smaller one is below, you're in a downtrend.
Okay, so you said we should not ignore the bullish pin bar. We should wait for it to, because we have already noticed on a downtrend, right?
We are in a downtrend already, and the bullish pin bar is far away from the resistance. So you should pick it, you should buy and take the price up towards the mean. Remember, let me tell you guys, whenever you look at trading happens like, this is like basically like when you breathe, you have to breathe in, then you breathe out, and then you breathe in, and then you breathe out, and then you breathe in, and so on and so forth. So that is how, sorry guys, I forgot to right click, and so I'm drawing my own things. Having to draw something else. Okay. So whenever you see the price going up, it will take a slight reverse towards the mean, and then to continue. Now, whenever you see the price being far away from the resistance in a downtrend, like here, and you see a bullish pin bar or a bullish engulfing or a tweezer bottom, or a 3 white soldier or a 1 white soldier, whenever you see all those things that are bullish, far away from the resistance, because these lines are resistance, you can take it, you can buy and make some minimal profit as we get towards the resistance.
So you buy at what price?
you look for the price you're going to enter at, and the price here should be, you should have bought at 8,000. Can you read the price for me? At the far right, where the dotted line is pointing.
Kadogo, I can't see
That
it.
would be 8,873.
Correct. Correct. That's where you should have taken that price, and then you wait until it gets to around 9,135. You would have made a complete $300 there.
In a span of how long? That's
This
good.
is in a span of 12 hours.
Wow. That's a good profit.
So this candlestick,
Yes.
one candlestick.
Okay. So the price should just be at the top shadow. It's called top shadow, eh? It's called a top shadow. Just above the bullish pin bar.
You can buy right at the top of that shadow, or exactly where that bullish pin bar, where its body opened, because it is red in color, where it opened. If it was green, you could have taken where it closed, but because it is red, you take where that candle, at the top of that, the body of the candle, at the top of the body of the candle, basically. In order to acquire
Then
to get the minimum entry price. Is that okay?
Okay, then you look to sell it because it means it will. I mean, the pattern here just shows it's gonna go to an uptrend, yeah.
Yeah,
because it's coming from a downtrend.
Yeah, we are in a downtrend generally. It's not going to go to an uptrend. It's not going to go to an uptrend. It is going to take a price reversal towards the mean. There is a difference between downtrend and naona unachanganya majina. What a downtrend means, it means a long-term sustained price going to the downside.
Yes.
What you are doing here, when you buy, you are counter trending. You are buying against the trend. The trend is going down, and you are buying in order to, because you believe the price will take a mean-term reversal towards the mean. It will reverse towards the resistance unless it breaks above. Once it breaks above, like it broke here, you can see we are now in an uptrend. So this is an uptrend. Why is it an uptrend? Because the candlesticks, which are the prices, are above the moving averages. So when the candlesticks are above the moving averages, that's an uptrend. When they are below the moving averages, it's a downtrend. Or when these 50, 21 EMA iko juu, yeah, 50 iko chini. This is also an uptrend.
That's an
So
uptrend,
it is an uptrend by all those means. So there are three ways you can determine an uptrend. Number one, when the candlesticks are above the moving averages, that is an uptrend. Number two, when you see the moving averages following each other in the pattern of the smaller one being above the bigger ones. The bigger ones are below. So 50 moving average, 21, and so on and so forth. So that is an uptrend. So here is an uptrend. So I'm getting back to you, Mwendwa. Can you tell me which pin bar are these? What is here? Which candlesticks are these?
That's
each one of them, they are more like the same. Each one of them is called
those are three, right?
No, those are
two.
Those are they 3 or 2?
Two.
Okay, they're so small. I got trees are something. Trees are top, I think. Trees are bottom.
You use spectacles?
No, I'm using a laptop. I'm using a very small laptop.
Oh, okay.
Trees are top or trees are bottom? It is trees are something.
No, these ones, each moja inaitwa nini? Hii moja inaitwa nini? Hiyo moja.
Oh, it's a tweezer.
Ikiwa moja peke yake, forget about the tweezer. I want the name of the one. Ikiwa moja.
If you're referring to the green one, it's a bullish pin bar.
Correct. What about the other one? Ikiwa hiyo red tu peke yake.
Bado na kama ni bullish yenyewe pia.
Correct. So those are two bullish pin bars.
Yeah.
And you can also say, because the body size is inatoshana, to me this is not a tweezer top. The reason why it's not a tweezer top, because there are two bullish pin bars and they are seated on the support.
Okay.
They are seated on the support and they are bullish pin bars. So those are two bullish pin bars and not tweezer. And I'll show you a tweezer. Let me show you. Now tell me which candlestick is this. Ken, these two of them.
That would be. Wait, let me recollect my notes.
No, unasoma sasa, una revise. Mbaya hiyo.
That would be what? That would be.
Mwendwa?
Yeah, that is a tweezer top.
There's a tweezer top.
Tweezer top is.
This is the reason why it's a tweezer top. It opened here, went. This was going up, price was going up, and then we saw that green one closing right there, and the next one opening right at the same price level. Though it had gone up, hit some resistance, came down and closed there. So then where it closed, the next one opened at the same position and then went down. Even if the body size are not exactly the same, but they are two. First of all, they are two. Always when you remember, when they are two, they are tweezer. When they are two, always they are tweezers. So if it is a tweezer, is it a top or a bottom? How do you determine whether it's a top or a bottom? If it is a top, it has to show that the price was going up, this green candlestick going up, and then a red one coming down. That means that's a top. It went up, then it is coming down. So that was this is a top area. Because this was going up, then now it's coming down. So this is a top area, so that's a tweezer top. And tweezer top is bearish. When you see it, sell your Bitcoin there and wait for the price to come down. And then can you, Bridget, tell me which candlestick is this? Bridget? Those two? Bridget, can you hear me?
Can hear you.
Yes, Fadhali. So,
I think that is to the bottom.
to the bottom, correct. Because you can see the candlesticks, you can see we are going down, and then all of a sudden, you see where the last, this one, where the bearish one closes, the next one opens. They open at the same position. This one closes and the next one opens at the same price. And then this one goes up. So that tells you the price was going down and then now it's going up. So these are bottom area. So it's tweezer, two of them, bottom. So tweezer bottom tells you it is bullish, the price will go up. And then I want you guys to tell me which candlestick is this. And this one now goes to Ken. Where is this? Where is this? Where is this? Let me get a good one. I'm looking for a better one. Which candlesticks are those, Ken?
So there are three.
Yes.
Definitely, they're not tweezers. That would be is it an evening star? No.
No.
No. That would be.
This is an evening star. This one. These three.
Yeah. An evening star.
Three candlesticks that are red in color. Zikiwa zinafuatana, bei inaenda chini 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 zikiwa tatu. What's that candlestick, Ken?
Oh.
Mwendwa?
Black crows.
What?
3 black crows.
Correct. So 3 black crows. So we have three black crows and three white soldiers. So those are 3 black crows.
Gigi.
Yes.
You have moved away from the previous. There's a. Oh, you want to show something? Okay, just show fast. Show fast. Yes, we can see.
So this is one white soldier. The price closes there and then jumps up. You get that gap. So this is one white soldier, but you have, and then you have one black crow, that gap falling. Then we have 3 white soldiers and 3 black crows. I hope, yes. I hope now Ken is with us.
Yes.
Then let's ask your question, Mwendwa.
Yeah, there's just before you asked Ken that question, there was a tweezer bottom we saw somewhere. I don't know, where is it? Oh, it's that one.
This one.
Yeah, that tweezer bottom. And it's bullish, right?
It's bullish.
It's bullish, and it's sitting on the on the resistance.
Correct. Now let me come to it. I know what you want to ask.
What does it mean? Yeah.
So if this candlestick had gone down, maybe it started here and ended up here, and then the next one opening and ended up here. So if we had this being shorter, these are very good tweezer bottom. But now the challenge is, if you take the price and already appeal isha guza at a resistance, isha guza is if moving averages, which are resistance, because we're in a downtrend. The candlesticks are below the moving averages, so we're in a downtrend. So if kinunulia hapa, ni challenging kwa sababu tayari iko kwa resistance. So yes, it is tweezer bottom. I would ask you to wait, see whether the trend is going to change to an uptrend, and you buy after the candlesticks are above the moving averages. That's what you should do. Wait until they go above. If already so you wait, and then when you're waiting, when you're waiting to see what will happen, you see this. So which candlesticks are these, Mwendo?
That is an evening star.
Correct. So when you see an evening star, what do? You know the price is not going to go up. So the price is going to go down. Yeah. So you don't buy, you keep off. You keep off until you see this. Tell me which candlestick is this, Ken? Until you see this. Those 3. A bearish one, then and then a bullish one. 3 of them.
That would be.
This is an evening star. So what is this one?
Morning star.
Correct. So this is a morning star. So morning star, you can now, it is far away from the moving averages. Though we are in a downtrend, you can buy there and then wait for the price to go up, and then you can sell at around there. And then wait for the price to go above. But there is another way of selling, I'll tell you. But basically, you can buy there at the price is what? Can you read for me the price, Mwendwa? Buy there right above the body of the bullish candle on the morning star.
Okay, let Ken read. Me, I can't see those prices.
That would be 9. Is it 9357?
Yes, 9357.
Now let me ask you, Gigi, yes, about this candle.
Correct. Ask.
This morning star and evening star. So it doesn't matter the color of the candles.
No. I only said only one. Pin bars. Pin bars, the color of the candle does not matter.
Okay.
Bullish pin bar can be red, can be green, as you can see here. Both of them are bullish. The reason why they are bullish is the shape. Because the price came down and then it was pushed up by the bulls. So it ended up closing at a high, forming a shape that looks like a pin. Okay?
Okay.
All the other candlesticks, the color of the candle matters a lot. Like like when you have, how do you differentiate between a morning star and an evening star? In an evening star, you have a bullish candlestick. The price is going up, so a bullish candlestick, and then an undecided candle, and then all of a sudden a bearish one. So telling you ni jioni tayari. Hii nyekundu ishatokea. Then a morning one, you see the prices going down. You see that bearish candlestick, a red one, and then an undecided one. The undecided can be any color, yeah?
Uh-huh.
And then you see a bullish one going to the upside. So that is morning. The bullish one is telling you we are going to go up. It is in the morning. So wake up. So that is it, Bridget. Do you understand the difference between evening and morning?
Yes.
And also the position is very important. You see this evening star seated on the resistance, the moving averages, which are the resistance in a downtrend. So the price will go down. This morning star below the resistances, telling you this is an area of support, the price will go up. Now looking at Twitter, let me take Twitter so that you understand why. Ngoja wewe ngoja kwa sababu tutachanganya. Can you see this? I want you to tell me why there is this. Can you see those two colors? They really matter. These are Twitter what?
Bottom.
Twitter bottom. Why have you said that it's bottom? Because the price was going down with the bearish one, and then all of a sudden it's going up. So the price has bottomed. So Twitter, the price has bottomed. It's gone down, then going up. Now it's taking an up, and now that is a bottom. So this is a Twitter bottom. Twitter top, the color should be vice versa. So the color matters a lot, and here is a Twitter top. And so Bridget, do you understand the color matters now?
Yes.
Okay, now ask.
Yeah, I was asking that morning star, but I think I got my answer. I don't know if I'm right.
Okay.
The morning star on the extreme right, yeah?
Mm-hmm.
The one that is circled.
This one.
Yeah. One circled earlier on.
This one.
Yes, that one. You said it's on a downtrend because the 21 EMA is below the 50 EMA, yeah?
Yeah, we're in a downtrend, and then you see a morning star.
It's a morning star. So you said you wait because it means the price is going to go up.
No, I said you buy because the price is going to go up. Because the reason why you have to buy is because sorry guys, I'm trying to get this sign out. Hope I make to get it out. I'm good now. Let's see if I can click on it. Good. So I was saying this morning star Mwendoa, it is far away from the moving averages. Maanake ikiwa mbali, maanake haiko karibu na resistance. Hizi ndio resistance. Iko huku chini ya resistance. So you can take that buy and wait for the price to go up.
Right.
So when it is below the moving averages, far below the moving averages, it tells you it is far away from the resistance. So it is not on the resistance. It is a moving average on the support. So it is on the support, so you buy. Morning star should be on the support on the moving averages when it is in an uptrend. But in a downtrend, like in this case, you should see a morning star below the moving averages, a little far from the moving averages.
So JJ, I have a question.
Ask a question.
So at what point should you sell? These are...
Okay. Now, at what point should you sell?
Yes.
I'll teach you how to sell. This one is a tricky one because you see it is very close to the resistance, isn't it?
Yes.
So this one I don't want to discuss it. Let me discuss it when I teach you technical indicators. There is a tool called stochastic. I'm not running away from the question.
Okay.
I'm only saying I will confuse you. I'll start confusing you, telling you process of counter trending. I'll tell you when you see like such a move, you are supposed to open your stochastics and then ensure your stochastics become overbought. When your stochastics are overbought, that's when you sell. So if I tell you like that, you won't even understand what I'm saying. So
stock addicts.
Stochastics. So you sell when the stochastics are overbought, but I'll teach you stochastics. So don't worry about when to sell. Right now, I just want you to identify a positive candlestick. Identifying it is very crucial. And I want to show you another Mwendwa because I know you're right about
yeah, and there's a sentence you didn't finish. There's a sentence you didn't finish. Lakini uliza kwanza hiyo.
Let me use something here. Okay. Mwendwa, which candlestick is this? Ukishindwa usaidiwe na Ken.
Unazifunika hata mtu aoni.
That is one candlestick that iko katikati. Hapo kuna candlestick moja tu nimeisako. Tena nimeisako vizuri kabisa.
Okay. Yeah, nimeona. It's a bullish candlestick.
Bullish candlestick. So when you see it there, look at the moving averages. Are we in an uptrend, in a downtrend?
We're in an uptrend. We're in an uptrend because the 21 EMA, the 21 EMA is above the 50 EMA.
Correct. And the candlestick,
21 EMA.
That is one way of looking at it. The other way of looking at an uptrend is when the candlesticks are above the moving averages. So we're in an uptrend.
It doesn't matter which candlestick.
Now, I was telling you, we are in an uptrend. I'm asking you, which candlestick is that now? You have answered this one that I circled. Which candlestick is that?
It's a bearish one.
No, look at the shape. Is it bearish?
This one.
This
one that I circled
here, you answered it correctly. Mbeleni alafu sasa unageuka. Allah.
Oh, sorry, I said bullish. Oh, I'm sorry.
So this is?
It's a bullish candlestick.
Correct, because of the shape, isn't it?
Because of the shape and the EMAs, how they are.
No, positioned. The EMAs are not related. This is a candlestick. Just the shape is.
Oh, kivyake. Yeah. Yes, sir. It's
now the question is, look at the position. Is it a positive signal or a negative signal?
The position of that bullish candlestick.
Yes. Is it that? That's a bullish candlestick. Now the question is, if you saw that candlestick bullish, would you buy Bitcoin and wait for price to go up or not? That candlestick is bullish.
Yes, sir.
Would you take the trade or would you reject it?
I would take it because the EMAs, the 21, the EMAs indicate there's an uptrend that's coming because the 21 EMA is above the 50 EMA.
Aya, nani mwingine atajibu ya swali? Bridget.
Nimekosa.
I'm also getting answers.
Actually, I had the same thought as her.
Uh-huh.
I had the same thought as her.
So this is a bullish candlestick. Bridget, answer.
Well, it's a bit confusing because you can't know. I think you have to wait to see the next move of the candles.
No. This when you see this is an uptrend because the 50 moving average and the 21 is above the 50, and also it is an uptrend because the candlesticks are above any of the moving averages. So this is an uptrend. Always, guys, remember, always, whenever you are looking at trading, any trading, the price just because the word uptrend does not mean we should. Hapo ndio nataka nicheke kidogo kwa sababu unajua when you hear the word uptrend, it does not mean the price will go up like this. It never happens in any trading, even in forex. You will never see the price just going up. Jamani, you can inaeleweka.
Yes.
So
so it's a uptrend.
There is no day you will see prices just going up like this. Prices don't go up like that. Okay?
Yes.
Yeah, so that means nimenoa hapo, because it doesn't mean
so
it
this
is going up, it will go up again.
Before you, now this is what happens. Whenever you are looking at any market, what happens is just like a pendulum. The pendulum will swing to the other direction, then take a reverse, and then swing again, and then take a reverse, and then swing, and then take a reverse, and then swing. Like I said, breathe in, out, then breathe in again, out, and then breathe in, out, then breathe in, out. So this is usually, even when we are in an uptrend, this is what an uptrend means to everyone. Uptrend means the prices are making higher highs and then retracing towards the mean. The mean are the moving averages, which act as support, and then they breathe in again, and then breathe out towards the moving averages, and then breathe in and then out like that. So this is an uptrend. So what happens, these areas are what you call higher highs. So it is making higher highs. You see this high is higher than the previous. Then this high is also higher than the previous. So if you draw a line, if you draw a trend line, say for example, if you want to draw a trend line to join those higher highs, you realize that that line is diagonal, going to the upside, isn't it? That is what we call an uptrend. So now you understand what an uptrend is, isn't it?
Yeah.
Yes.
Okay. Now let me now come now to the issue of that. Let me discuss now that candlestick. I just want to delete these ones. Okay. I'm really interested with getting this, that they don't confuse you. Now let's discuss this. So this is an uptrend. The price went up, down towards the move. Whenever, look here, and I want to circle out. Whenever we in an uptrend, the price moves towards the 50 moving average, and that acts as support. So 50 moving average is support in an uptrend. The price hits that support and continues to make an high. It hits that support and we continue to make highs. Are we together?
Yeah.
Okay.
Okay. Now we hit that high, that we hit a high, came down, hit the support, and now the price is continuing to go high. Then we also hit the 21, which is also a support, and then the price went high. Now at the high area there, you see a bullish pin bar, and it is not touching any of the support. I told you candlesticks mean nothing. They have to be read together with the moving average. So it is a bullish candlestick. It is a bullish pin bar actually, but it is a fake out. It is a false signal. Don't buy Bitcoin, because that bullish signal is not seated on the support. Any bullish signal should be seated on a support. In an uptrend, the support is the moving averages. That one is hanging up there. Iko peke yake huko kwa mwezi. So you can't buy because the price will not obey it. Sijui kama nimeeleweka.
Okay. So you're saying if it was seated on the support, you would buy, yeah?
Yes, if it was seated, and let me show you where I would have bought if I saw it there. Now let me remove this. Can you see now the bullish candlestick there? Now, say for example, I hope I see a bullish one. Okay, let me show you one here. If I saw this one, I would take it. This one, the one I had showed you earlier. Can someone see this? Can you see that? Unaona hiyo bullish pin bar imedunga ile 21 EMA.
Yes.
So imeidunga hapo, maana yake imeikanyaga. It's stepping on the support. So that one I would take it and go and buy. The price will go up definitely. Another one I want to show you where we have a bullish pin bar and on the support, I'm looking for one. So I hope I get to see one soonest.
It's made sense finally.
Yes?
No, I'm saying I've seen some sense finally.
Yes, yes.
That pin bar is.
Can you look at this one? Can you look at this one kindly? Can you look at that green candlestick and the red line?
Yes.
Unaiona?
Yeah.
Yes, sir.
What has happened there?
It has hit the support.
So we are in an uptrend, the price went up, then made a retrace towards the mean, and whenever it gets to the mean, and the mean is the mean, where we have the moving average, which is the 21 EMA here. Imekanyaga support, alafu sasa the price will go up.
So at what time, at what point would you sell?
At what point would I sell? I would buy at 7,837, as you can see there, and then I would hold on to either see a bearish candlestick, and I can sell with this one. I can sell right here if I'm a scalper. If I'm if I'm a swing trader also, I can sell here. 8,000. So from 7,850 or 7,840 all the way to 7,000 to 8,000.
80,000, yeah.
And this is what I would have made me sell in simple terms. Of course, I wouldn't sell here, but just for explaining to Bridget, so because we are at candlestick level, I would obey this. Which candlestick is this, Bridget? Can you see this candlestick nimezungukia ni kamoja?
Kamoja.
Ka candlestick kamoja, unakaona?
Bearish. Bearish bar.
Iseme vizuri. You don't have a bearish bar.
Bearish pin bar.
A bearish pin bar.
Yeah.
So that's a bearish pin bar. So a bullish pin bar, I would have taken the trade there because it is seated on the support, and then I wait for the price to go up, and it went up, and then it is beginning to come down, and then I see a bearish pin bar. This bearish pin bar ni kama kapini kame face juu, maanake bei ilienda juu alafu the bears push the price down ikafungia hapo. So if I look at that bearish pin bar, it is not on the support, so I cannot ignore it because iko huku juu, iko kwa resistance. So this is an area of resistance because it is far away from the support. You can see it is hanging up there. So this is good. A bearish candle that is far away from the support is basically on the, if something is not on the support, it is on the resistance. Are we together?
Yeah.
This is an uptrend. Here, this is an uptrend because candlesticks are above moving averages. And then you see candlestick, a bearish candlestick high up there above the support. So I would sell because this is a bearish pin bar on the resistance. So I would sell, and I make a good $100 and something.
Can I ask a question?
Ask as many.
Now, the point you're saying you're going to sell,
Yes.
what if you ignore it and you wait, it goes down and then it starts going up again?
Like this position, yeah? I buy here, and then I wait for the price to go up, and then it takes it down. I sell,
Yeah.
and then after selling, the price goes up, and I miss the profit. That's what you mean, isn't it?
Uh-huh. Yes.
I have said I would sell at this position because I'm talking to Bridget, who has
Yes.
just learned candlestick patterns. But in the actual sense, I would not sell here. In the actual sense, when I'm trading, I would sell at this position. Let me show you where I would sell, because now you are worried about where to sell. I want you guys to learn where to enter the trade, where to make a buy, and when to make, mostly when to make a buy, and also where to make a sell. When you see this bearish candlestick, you sell. That's why I think HI. But if I'm the one doing the trade, I don't want to show you complicated stuff. It's not good. It's not advisable when someone is trading. So I would have just come look at stocks, and then I can edit that. So this is the place I have bought. I have bought at this area. I would wait until when the price the price right now is overbought and can remain overbought for such a long time. I would wait until when it is oversold, not oversold, basically somewhere overbought, losing momentum to the downside. I would sell at that position. So I would sell here. I would sell at this position, around that area, because on my stochastics, I've also captured this area. It's the same area. Umeelewa? This is more complicated. I don't want to talk about it. It gives you a perfect place to exit. I would have exited. I would have exited if I'm using candlesticks to explain to you, because I don't want to go to complicated stuff. Let me just use candlesticks to explain to you, because I don't want to confuse it. Here is how you should exit. Can you see? I hope you can see this. Why? Can you see these two candlesticks? There are two of them. Tell me which candlesticks are those. And I want to delete this line because it is confusing you.
That would be bearish, Pinba, if I'm not wrong.
There are two.
That's to the bottom.
Two. Can you see them? Those are
to the bottom.
Those are
bottom. To the bottom.
Yes?
They are tiny to the bottoms.
They are to the bottom. Would you buy with those to the bottom? Because to the bottom means it is bullish, the price will go up, isn't it?
Yeah.
You should not buy. Why should you buy? Because it's bullish. But we are in an uptrend. A bullish candlestick that is not seated on the support of any moving average should be rejected, just like we rejected that other pin bar. Now, why would I sell at this point? Why would I sell at this point? Let me show you why I would sell. Sorry, it's
about to go. The price
okay.
Go down to the
now I want to show you something there. Is it if you move your candlesticks to 1, 2, 3, 4, you move to daily or 3-day and stick to the same position. That was, I wish I had crammed the date. It was around this area. It was around this area.
Mm-hmm.
When you go to 3-day candlesticks, this is what you see. Same position. Now, what is that? Those two candlesticks.
Those are those are bearish pin bar.
No, those are not bearish pin bar. They don't even have any shape that looks like them. These ones are two.
Tweezer top.
Yes, tweezer top. Because of the body size, yeah?
Yeah.
One is closing where the next one is opening, and then it goes down. So the size of the candlestick does not, it should not really scare you or make you feel as if it is not it. They can be small, but so long as they take the same shape, just always take the trade. This is where you should have sold. But this is getting, but I'm happy you guys are able to identify the candlesticks. Also, another one I want to share with you here. Tell me whether you should take it. Which candlestick is this? There are two of them.
Tweezer top.
Tweezer top, correct.
Yeah.
Because the price went up and then now it's coming down. So it is telling you this is a top area. So this is a tweezer top. A tweezer top is a bearish signal. It tells you that the price will go down. Now, this tweezer top, looking at it, you should sell. If you had Bitcoin, you should sell. Now, if looking at the general trend, the candlesticks are below the moving averages. So these are downtrend because candlesticks are below the moving averages. So these are downtrend. In a downtrend, moving averages act as resistance. Now, if they act as resistance, then you see tweezer top, which should be at the resistance because it is bearish. Any bearish signal should be at the resistance. Now, this is not on the resistance. Should you take it or leave it?
We just leave it.
You just leave it because it does not mean anything, because every bearish candlestick, whether it is a tweezer top, whether it is a 3 black cross, whether it is 1 black crow, whether it is a bearish pin bar, whether it is all those bearish patterns, whether it is an evening star, all those are bearish. Whenever they are not at the resistance, and the resistance here, because we're in a downtrend, it is the moving averages. Now, because this one is not at the resistance, then you should leave it. It does not mean anything. I hope tunaendelea kuelewana. Haya.
You know, Gigi.
Yes. Let me just take you to another.
Okay. Take us to another, and then I'll ask my question.
I want to take you to another. There are very many of them here. You can see these two, but again, you can.
But all of them are not sitting at the moving averages. So
Yes. I just want to take you to one, and then yeah, this one. Let me just map out this one. This one looks a little bit better. Which candlestick is this? Those two?
Tweezer top.
Yes?
Tweezer top.
Tweezer top.
Tweezer top.
Yes.
Yeah.
Now, because the price went up, now it's coming down. So these are top. Now, these tweezer top, they are lying where?
And the resistant.
Yes, they are
The
seated
support.
at the resistance, which
Yes.
is the 21 EMA. Now, because they are seated at the resistance, this one tells you price will go down. So this one, I would tell someone to take the price, to sell Bitcoin, because there is some negativity there. So some negativity there. So let me, now you see, if you sold, you would have sold here at 6,859. And then you hold and wait to see something different. And then you exit, Bitcoin makes a high. It happens. But also remember, this is 3 days, so probably you would have taken the price you would have bought somewhere around 65. Somewhere you would have bought. If you change the candlesticks, you realize this is which day. Let me take you to the specific day. This is 9th of April 2020. So taking you to 12-hour candle, 9th of April. 9th of April, we are in the 9th of April. 9th of April, 19th of April. Yes, and here we are on the 9th of April. So 9th of April, at this day, can you see this 9th of April? Which candlestick is this? Can see again?
The top.
Okay, in tweezer top, okay. But after seeing that tweezer top, the price will go down, isn't it? So you sell at 7,174. In a lower time frame, like 12-hour, you would see it better. So, and then you come and catch the price when you see this now. When you come and see this, let me capture it well for you. Then you come and see something like this. You would have bought when you see this green candlestick. Can you see that green candlestick?
Yeah,
What is it?
you can see it. It's a bullish candlestick.
And it is seated on the what?
The 50 EMA.
Not on the EMA, on that blue.
Or 50.
50 what?
Oh,
Yeah.
50 EMA.
EMA.
MA.
MA.
Yeah, okay.
SMA.
Yes, SMA.
Moving
So
averages.
simple moving average. But simple moving
Yeah,
average.
SMA.
Yeah. Anyway, Sasa, so this is seated on the support.
That's
and
a good one.
support. So you can buy at this point, but always remember to put your stop loss a little far. So you would have placed your stop loss there and it would have been triggered, and you can see this is a market manipulation. That's why the price plunged down and then went up. So
Gigi, sorry, I'm sorry. At you buy where you buy at the shadow or at the top of the.
you buy at the top. You buy at that top of the body of that bullish. This top of the body.
Oh.
You can buy at the top of the shadow or top of the body. I always advise top of the body if you're buying top of the body.
Okay.
So that you can capture it at a better price. And then you place your stop loss a little far from the lower shadow, from this lower shadow, a little far. If you would have put it somewhere around that area, this would not, you not be triggered. You know, if you place it at the lower shadow, the stop loss, itaguzwa na hii. Sinaona hii ingeuza stop loss yako. So you put it a little far. Say for example, you are supposed the lower shadow is at 6,600. You put your stop loss at 450 or maybe 400. You lose, you get away by $200, and then you also wait to make a profit by $200 also on the above side. So you buy at 6,850, and then you add $200. That will take you to 7,050. So you wait for 7,050, and you even sell at this point 7,150, and you take a total of $350. Sorry, yeah, $350 or thereabout. And you would sell when you see this. Which candlestick is this, Bridget?
Tweezer top.
Tweezer top, correct. So when you see tweezer top, it is bearish and it is on the resistance. It is not seated on any support. It's on the resistance. So you sell. You could make some $300. Trying to just to tell you something, that there is another way you can trade on the candlesticks. all you need to do is just to identify a trend. When you know we're in a downtrend, always know moving averages are resistance. Whenever we're in an uptrend, always know moving averages are support. So to Ken, if you are looking at this, so the price goes in, out, then it takes an in, out, in, out, in, out. So that is how, this is something I want you to see. These are the support, this 50 moving average. So you can be trading this way. You see a tweezer bottom, you buy. You wait to see a tweezer top, you sell. You see something bullish here, you buy. Anything nothing at the support, you wait. Whenever the price touches the 50 moving average with this bullish pin bar, you can buy at any one of them, and then wait for the price to go up. You see tweezer top, you sell. You see again here something that is positive, tweezer bottom. Tweezer bottom. I hope this tweezer bottom tunaziona. Can you see them? And they are seated on the 50 moving average. Can you see those two?
Bye.
Yeah.
Yes, so those ones are tweezer bottom. So tweezer bottom, you buy because they are on the support. They are bullish, they're on the support, and then you take the price up. And you wait until when you see a tweezer, maybe a tweezer top or any other bearish, and you can see it here. You could take your profit there or still hold on a little bit
until it goes up.
Yeah, you can reduce the hurry. You can practice calmness until you see. I'm going to teach you something else that you will make sure you don't exit. But as per now, I tell you exit at this point. As per now, because here we are only talking of candlesticks. When we start using other tools, you realize you have to combine candlesticks, moving averages, and so many other technical indicators such that you do not exit here and you wait until you exit somewhere around Hukuju or somewhere around between this area here or this area, but you don't exit midway like here.
Yeah, because that's where you make your maximum profit.
Yes, correct. That's now those other tools are going to allow you make maximum profit. Can we call it a day? And tomorrow we start technical indicators so that we stop talking of other technical indicators and we start them.
Yeah, these are top, these are bottom.
You
need to
guys
digest.
revise these candlestick patterns, but remember they will come. They will come. Just right now you are struggling with them. Zitaingia. When we go to other technical indicators, you realize the easiest are candlestick patterns. Actually, the candlesticks are the easiest. And you realize you are able to understand them very fast. Like Mwendo can tell you what this is and where it is. Mwendo, tell us last one. What is this? What candlestick is that?
That's a morning star, and it is seated on the support.
Correct. Good. You see now.
21. Tumekuwa wewe kuna siku huko unajua hizi maneno. Is there a time you didn't know these things?
Yes, nobody.
Yeah,
was
by the way,
there's a time I never knew anything. And it was just the other day, probably.
Serious. There's a day you had candles for the first time. Ama you were born knowing.
Definitely, Mimi nisikia candlesticks. I think the first time in 2017. So you
the other day.
Just the other day.
The moving average. At a moving average, you knew it at that time.
Yes, even this trading with moving averages.
On crypto.
Yes, on crypto.
And a rich man, my friend.
So you become, and these ones are very easy. You notice they're very easy. Then with over time, there when you learn other things, you realize hii ilikuwa rahisi sana. You wonder even how you are not able to understand. Actually, utafikiria you are even supposed to know it before you are taught. So,
Gigi, a quick question, eh?
yes, ask.
Yes, you say and I like what you said, that uptrends, see up. Uptrend is going up and down, but every time you hit a new up.
Yes. Every time
you go down, hit a new up. That is,
now, what are these?
A trend, let me show you what
yes.
an uptrend would be. Whenever a price is making higher highs,
yes,
and also making higher lows, yeah? Higher lows, that's an uptrend.
Yes.
Or look at them moving up. There are so many ways of telling an uptrend. So here I'm just drawing a line just to show you what really happens.
The higher highs.
And
by the way, Gigi, you'll tell us how you pick those lines.
Yes. Just by pointing the higher area, and you can. Then actually here, this was the best point there.
Mm-hmm.
Yes, that one. And then also you pick some other one showing you the lower lows, the higher lows.
Mm-hmm.
So this one is showing you how to pick the low areas. And actually this is it. And I'll teach you so many other styles of trading. You don't have to rely on one. So you see, the price was traveling along this channel, yeah, until we broke above. And then we again got it, and now we got to sideways market. So basically, we were traveling through this channel. And I can tell you where the channel ended. The channel ended right here. If I was to draw something different here, sorry. This is the channel. Yeah. The channel ended actually there.
Okay. Now what is that?
And I want to adjust this for you so that you see what happened. Can you see that purple region? So the price was traveling inside that channel to the upside, and then we exited that channel at this point. We exited at that point where we broke right above. So this was the channel. So this was the uptrend. So it goes up, down, but always to the general direction. That's why it's called an uptrend. Is that okay, everyone?
Yes.
Yeah. So what I was saying is,
yes.
This is very good, especially for people who are newbies in the crypto world, because they say, "Oh, Bitcoin is going down. Oh, it's going to crash." They don't have this information that uptrend is not up.
Correct.
It's actually up, down. With higher lows and higher highs. Yeah.
Correct.
Yeah.
So do wish you a good night. Joining the class is just starting. I'm always
thank you very much.
But I do wish to thank everyone. We prepare tomorrow. We start technical indicators tomorrow.
Thank you very much.
Hi, so I'll be revising these ones. I'm also going to put these candlestick patterns, that PowerPoint. Ndaiweka kwa mobile app. So don't worry, you can download it on the. You go to archives, choose basic crypto trading, and then choose documents, and then you will download. Itaingia kwa simu yako au itaingia kwa simu yako.
So.
Okay, I do wish you good night.
Good night.
Okay, good night.
Okay,
good night.